Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. This is our weekend question and answer, where some of my readers had sent in some questions. I'm going to try and answer them for you. Okay, first question comes from Daniel. Hi TK, I was wondering what you're looking at for your pre-opening comments each day. Do you have a chart of the pre-market? Are you looking at the New York Stock Exchange book, futures contracts, etc.? Okay. Looking at the QQQQs, which start trading early in the morning. The SPYs trade, they trade worldwide. 1 o'clock in the morning, you can turn on Bloomberg and find out where the SPYs are trading in Asia or in London. So they trade all over the world. But I start looking at them around 7 o'clock or 7:30, particularly around 8 o'clock, because that's when our own pre-market markets open, and they take on a little bit more meaning at that time, around 8 o'clock in the morning. So that's basically what I'm looking at is, the futures market and the SPYs. Okay, Daniel, I hope that answers your question. This is from Tom. I was wondering if the specialists do anything different to open the market when the futures are limit down, like they were on Friday. Well, that's the first time that they've been limit down since they initiated those so-called circuit breakers. They were put in place after the '87 crash. And to the best of my knowledge, Friday was the first time that any of them were ever used. So what I need to tell you, though, is that they were set off only in the SPY futures market, which are not traded on the New York Stock Exchange. They are traded on the Amex, but they're also traded in Asia and in Europe. So they're worldwide traded, the SPYs, which is basically the Standard & Poor's 500. Okay, so yes, they were limit down before the opening in New York, but that does not interfere with the New York the New York opening. The New York opening have their own circuit breakers, and until they're reached on their own, the market's going to trade normally as it normally would. Did it put a lot of pressure on the market? Sure. Did people think that we were going to be limit down at the New York Stock Exchange? Yes. And that limit down would have been 1,100 points before they would have stopped trading. And that would have had to happen between the opening and I think 1 or 1:30. Then there's other circuit breakers behind that also. I don't know the exact percentages, but if you want to know, all you have to do is go to the New York Stock Exchange website, or Google. You can Google NYSE circuit breakers, and there's a whole layout as to exactly when each one kicks in. The idea behind them is to, in a panic, like there was on in '87, on that one day where we were down 22% in one day, was to stop trading for like a short period of time, for half an hour or an hour, just so people can kind of catch their breath and maybe realize maybe they're making a mistake. So that's what that's all about, is the circuit breakers. But if you want to know more about them and exactly when they're going to get triggered, the NYSE circuit breakers, Google it, and you'll get the whole laydown. And the market actually fooled everybody on Friday, because everyone would assume that everything was going to be limit down, and the market only closed down 300 points. So you can't always tell from the futures market and the SPUs exactly what's going to happen in New York. Sometimes it's helpful and sometimes it's misleading. So you need to be careful when you're looking at these pre-markets. Okay? All right, Tom? I hope that answers your question. This comes in from David. David says, I was wondering if you could please explain about the +tick rule. I keep hearing about it and I would like to know what exactly do they mean. All right, I guess more experienced traders know exactly what it is, but for those of you who don't, I'll go over it, okay? Up to a year ago, the +tick rule was if you wanted to sell a stock short, okay, let's say this last sale was 50, and the sale before that was 49. Okay, I'm going to use exaggerated example just to give you the idea. And let's say 50 was higher than 49. If you wanted to sell a stock short, you could do it at 50. You can't do it at 49. You cannot hit a bid at 49 because it's lower than the prior sale. So a plus tick means higher than the last sale. A 0 plus tick is also the same thing as a plus tick. A 0 plus means you've already established a plus tick and it's retrading again at the same price. So in other words, if it trades at 49, then it trades at 50, that's the plus tick. You can sell short at 50. You can, if it double ticks there again, that's a 0 plus tick. You can still sell short at 50. You can sell short at 51 if that's the next sale. But you cannot then, after a 51 sale, knock it back down to 50. Where now when they eliminated that plus tick rule, you are able to do that. So if you had a big enough order to sell short, you could take a stock from, let's say, 51 down to 50, hit that whole 50 bid, hit the 49 bid, hit the 48 bid, hit the 47 bid, hit the 46 bid. Now these are exaggerated examples, but this is what is possible now because there are no plus tick rules. And that's what they want to bring back is the plus tick. It's okay to sell short, but you need to do it on an uptick higher than the last sale. Meaning someone has to be willing to pay higher than the last sale for you to be able to sell short. There has to be demand in the issue for you to be able to sell short. When you can hit a bid to get short, that means there's no demand at all and you can just drive a stock down. Okay? So I hope that explains the plus tick rule. And they may reestablish that again in the future. There's pressure to do that. But as of right now, you can sell short on a minus tick. So, if you're a short player, it's actually pretty good. Okay, I hope that explains that. Next question comes in from Christine. Christine has a lot of questions, but I'm going to sort of paraphrase some of it. She wants to know, do I ever pay any attention to Elliott Wave? And do I look at charts going back as far as 29 to try and help me get some trends? And this opens up a question that I get a lot of questions about this. It's mostly about, this analyst is saying that, or the Elliott Wave guy is saying this, or the Russell Dow theory says this. I have to tell you something. And I've been trading for 40 years, 30 years on the floor of the New York Stock Exchange. I've been a student of the market for 40 years. I have looked at and explored and tried them out, every possible theory, every analyst who's ever lived, who ever made a name for himself. And if I used the Dow theory, it would be called trading with the Dow theory, or if I used the Elliott Wave theory, it would be called trading with the Elliott Wave theory. But it's not. It's called trading with TK. Okay, and this is a summary of my 40 years experience as to what works best, what I find works best in the market. And so, for you to ask me questions about, not just you, Christine, but everybody, about what my thought about some other analyst, what he has to say, I don't care. As a matter of fact, I don't even want to know what they have to say. They can have their opinions, but, it just clutters, it's just noise to me, I have my own ideas. I do all my own work. I don't, I don't listen to anybody else. As a matter of fact, I don't even want to hear what they have to say because it just clouds. It just makes the issue even muddier than it already is. And Chris, about as far as the looking back at charts at 29, my charts don't go back that far, but that's not going to help me. I'm interested in what's going on now, not back in 29. So I'm looking at current charts now. Maybe I may go back a year and see if there's a support area, but I'm looking at the current pattern now. So I'm looking for what's the next move going to be, not what the move is going to be in 3 years. I only care about the next move. So that's why I'm only looking at the current charts now and the current patterns, and it's all about patterns to me. It's not about average volume, and volume, people ask me a lot of questions about volume, and volume, interesting, but it's not reliable. It's not a reliable indicator, and that's why you never hear me, or rarely do you hear me talk about it. So I hope that clears up some of the questions and some of the concepts that people have as to where I get all my information from. It's just 40 years of cumulative ideas, exploring, testing, and this is all my own work. So I do all my own work, and I don't really, I'm not interested in what other guys have to say. Okay, so I hope that answers everybody's question. I'm running out of time. So until Monday, this is TK signing off.